What is going on, everyone, and welcome back to the channel, Explain the Charts. Today is Monday, September 29th, 2025, and we are taking a deep dive into the QQQ, the Nasdaq 100 ETF. First, let's cover the news and the overall market sentiment, which has been a bit shaky recently. Last week, the market saw its third consecutive day of declines, marking the longest combined losing streak for the major indexes since March. This came after reports showed the U.S. economy grew at a 3.8% annual rate in the second quarter, stronger than expected, which could temper expectations for Fed rate cuts. Analysts are pointing to high valuations as a reason for caution, with some predicting a strong possibility of near-term volatility. BTIG's chief market technician even stated that equities are the most vulnerable to a downside move since the April lows. On top of this, Wall Street is keeping a close eye on Washington as lawmakers work to prevent a potential government shutdown. So we have a mix of a strong economy, but also concerns about high valuations and political uncertainty, creating a very interesting backdrop for the price action. Now, looking at our daily chart, we can see the broader context. Despite the recent jitters, the QQQ has been in a powerful uptrend for well over a year, making a series of higher highs and higher lows. Just last week, on September 22nd, we printed a new all-time high right around the $602 mark. This level now stands as our key psychological and technical resistance to the upside. Following that high, we saw a sharp 3-day pullback, which perfectly aligns with the news reports of a market-wide losing streak. The price fell from that 602 high down to a low of about 588 last Thursday. This recent price action has defined our immediate battleground for the week. On the longer-term support side, a major area to watch is the previous all-time high from back in February, which sits around the 540 level. Even lower, we have a significant swing low from March at 495, which would be a critical line in the sand for the bullish trend. To really understand how important some of these support zones are, let's zoom in on the extreme volatility we saw this past spring. If we filter our chart from the beginning of March to early May of this year, you can see this massive drop and subsequent recovery. The market experienced a severe correction, falling from 540 all the way down to a low of about 402 on April 7th. Notice the immense volume on these down days, indicating widespread panic and selling pressure. However, this culminated in a massive bullish reversal candle on April 9th on huge volume, which marked the bottom of that move. This incredible V-shaped recovery established the 402 to 420 zone as an area of massive long-term support. Any retest of this area in the future would be a major test for the market's strength. It serves as a reminder of how quickly sentiment can shift and how volatile this market can be. Now, let's switch back to the full daily chart to see how we got to our current all-time highs. After that dramatic April low, the QQQ began a steady climb back up through the spring. During the summer months of July and August, the price entered a consolidation phase, trading in a range roughly between 550 and 580. This sideways action allowed the market to digest its gains before the next leg up. The key moment came in late August when the price decisively broke out above that 580 resistance level. That breakout is what propelled us to the recent all-time high of 602. Crucially, that prior resistance level around 580 should now act as a major support level on any further pullbacks. A successful retest of this 580 level would be a very bullish signal for trend continuation. For a closer look at the current action, let's switch to the 1-hour chart. Here we can see the peak at 602.87 on September 22nd in more detail. The subsequent sell-off was fast and aggressive, taking us down to that 588.50 low on the 25th. Since that low, the price has bounced and is now consolidating in a range. We are currently trading around the 595 to 596 area, effectively caught between the recent high and the pullback low. This tells us the market is in a state of short-term equilibrium, waiting for its next catalyst. The immediate resistance for bulls to overcome is the supply zone between 598 and the 600 psychological level. To the downside, the first key support is that low from last week at 588.50. If we lose 588, the next logical target for bears would be that major breakout level we identified earlier around 580. Finally, let's drill down to the 15-minute chart to see what intraday traders are looking at. Here we can clearly see the sharp drop on Thursday, the 25th, followed by a bounce into Friday's session. Since Friday, the price has been trading in a very tight and well-defined range, mostly between 591 and 596. This coiling price action suggests a bigger move is brewing in either direction. Volume has been relatively subdued during this consolidation, which is typical before a breakout. For scalpers and day traders, the plan is simple: watch for a high-volume break of this range. A move above 596.50 could trigger a quick run towards 598. Conversely, a break below the 591 support area would likely lead to a retest of the critical 588.50 swing low. Alright, let's switch back to the daily chart and put it all together. To recap, the key levels are clear. Major resistance is the all-time high zone between 600 and 602. Minor resistance sits around 598. Our current price is hovering around 595, right in the middle of the recent range. Minor support levels are at 591 and the crucial swing low of 588. Below that, our major support zones are at the 580 breakout level, the 540 previous all-time high, and the significant March low of 495. So, what can we expect? The bullish scenario, which I'd place at about a 60% probability, is that this pullback is a healthy consolidation. In this case, QQQ would find support either here or down at the 580 to 588 zone before making a new attempt to break the all-time highs. This scenario would be reinforced by positive economic data, like a tame PCE report or a resolution to the government budget talks. The bearish scenario, with a 40% probability, would see a failure to hold the 588 and especially the 580 support level. A high-volume break below 580 would signal a deeper correction is underway, with the next major target being the 540 area. This would become more likely with unexpectedly high inflation data or increased political instability. The main thing to watch this week is the Personal Consumption Expenditures, or PCE, price index report, as it's a key inflation metric for the Fed. Watch for a volume-supported move out of the current short-term range to signal the market's next direction. That's all for today's analysis on Explain the Charts. Let me know your thoughts on QQQ in the comments below, and don't forget to like and subscribe for more in-depth chart breakdowns. Trade safe, everyone.